In the quiet northwest corner of Basel, Switzerland, sits an 18-story circular tower with no name on the outside. It does not advertise its purpose, issue public statements, or respond to interview requests. Roughly once every 2 months, governors of the Federal Reserve, the European Central Bank, the Bank of England, and the Bank of Japan gather here. They are joined by 50 other central banks to discuss the global financial system. These meetings have no official public agenda and produce no official public minutes. What these governors say to each other, and what decisions are influenced by their discussions, is never written into any public document. The most significant conversations regarding global monetary policy happen inside this room, entirely hidden from elected governments, the public, and the journalists who cover financial markets. The Bank for International Settlements operates as a private bank owned by other central banks. It was not created by international treaty, it required no public ratification, and its leaders were never elected. Under unique agreements, the BIS is exempt from the jurisdiction of every country. Its assets are immune from seizure, police cannot enter its premises, and Switzerland cannot tax it. This ensures a closed loop. It cannot be externally audited, entirely isolating its financial operations. This arrangement is a documented legal reality. It has allowed the bank to accumulate assets and quiet institutional authority for nearly a century. To see how an institution secured this level of immunity, we have to look back to the specific practical crisis that birthed it. In 1919, the Treaty of Versailles imposed reparations on Germany, totaling $33 billion. Moving those funds across borders was a constant source of political crisis, as every transfer required delicate diplomatic negotiation between resentful nations. John Maynard Keynes was among the leading economists who warned that these debts were unpayable and would eventually destabilize the entire European continent. By 1923, the burden helped trigger a total collapse of the German economy. Hyperinflation made the currency worthless and brought European finance to the edge of a breakdown. The Young Plan of 1929 sought a solution, a neutral bank that could manage these transfers outside the control of any single government. In 1930, a treaty signed at The Hague established the BIS in neutral Switzerland, allowing it to move money across hostile borders with the efficiency of a private institution. This unprecedented legal immunity was a tool of necessity. It was designed as a shield to keep the mechanisms of international finance functioning despite the political instability of the era. That neutrality remained in place during the Second World War. The BIS continued its operations through 1945, providing a venue where bankers from Allied and Axis nations technically remained members of the same institution. Thomas McKettrick, an American, presided over the bank in Basel for the duration of the war. He maintained the institution's operations, even as his own country fought a total war against the very nations that sat on the bank's board. During this period, the BIS processed massive gold transfers for the German Reichsbank. Following its own institutional logic, it processed these transactions without asking questions about the origin of the metal. History later revealed that this included gold seized from the national reserves of occupied countries and gold stolen from victims of the Holocaust. Dental gold and jewelry stripped from concentration camp victims were melted into bars and moved through the Reichsbank into the BIS. The bank functioned exactly as it was designed to. Its legal immunity allowed it to process these assets without moral judgment, detached from the atrocities being committed by its member states. At the 1944 Bretton Woods Conference, Allied leaders began designing the post-war financial order. The bank's wartime conduct had become a point of contention for the gathered delegates. U.S. Treasury Secretary Henry Morgenthau argued that an institution that had facilitated the finances of Nazi Germany had forfeited its right to exist, and he called for its immediate dissolution. The conference agreed with Morgenthau, passing a formal resolution to liquidate the Bank for International Settlements. But the resolution was simply ignored. The BIS leveraged its technical expertise and its deep connections among central bankers to remain useful, eventually outlasting the push for its closure. The bank proved that institutional inertia and technical indispensability are often more durable than international law. By the 1950s, the order to dissolve the bank was forgotten. When the gold standard system collapsed in 1971, currencies began floating freely. The sudden volatility in exchange rates made the BIS even more central to the coordination of global monetary policy. In the following decades, the deregulation of banking allowed international firms to take on risks that no single national regulator could adequately monitor or contain. The BIS addressed this through the Basel Accords. This committee developed international standards that dictate how much capital banks must hold against their assets. As this diagram shows, these standards are projected from Basel to national banking systems around the world. While these are technically recommendations, their complexity and the need for global standardization make them mandatory in practice. By adjusting these ratios, the committee in Basel can effectively expand or contract the amount of credit available in the global economy. These standards establish the regulatory framework for modern capitalism, written by people who are appointed rather than elected and who operate outside of public oversight. Right now, in 2026, the global financial system is moving toward the rapid adoption of central bank digital currencies. The BIS has positioned itself as the lead coordinator and technological architect for this transition to digital money. This shift involves a total redesign of how money is tracked, controlled, and used within the global economy. The systems that will govern our financial transactions are being developed right now, inside a tower that nobody voted for, nobody can audit, and no government can legally enter without permission.